What is up, everybody? How's it going? This is going to be a video of the biggest trade so far on my channel for your viewing pleasure. When I say biggest trade, I'm talking about on how far it moves. I want to believe it's a 9-tick move, which is pretty substantial for a scalp. A 9-tick move is what I would consider a home run. And it's a very easy trade, actually. And these are a type of trade that I want to take all the time. Just the opportunity that presents itself to take 9 ticks isn't always there or this easy to spot. So ideally, this is what I want. And this also goes to show to you that scalping isn't just taking, maybe $25 here, $37.50 there, an occasional $12.50 here, and hitting $50 trades. It's not just that. Scalps can yield you a lot more. And for this particular trading day, my goal was $200, and then I hit this trade, and it got me like $25 under 300. So I'm like, you know what? Let's make it a $300 day. So that's what I ended up doing. So this trade definitely got me way up there. In fact, the first $100 I made for this particular trading day, it was a struggle compared to this. So this is a nice setup. It's super fucking easy. I knew it was coming before it came. And I'm not talking about a few seconds ahead of time. I'm talking about I knew it was coming. And let me show you how I knew it was coming and explain to you, break down what's going on. Hold on, I'm repositioning myself, so I'm banging my knees in the desk. All right, so how did I know that there was going to be a giant long trade? Well, first and foremost, this is a volume profile trade. You wouldn't have known it was coming unless you had the volume profile up. So if you haven't watched the How to Read Volume Profile Part 1 and 2, you're doing yourself a huge disservice because you may not fully comprehend what's going on here. So let's just dive into it. We have this nice volume profile area with the point of control here in the center, represented by the sand color at 288.450. So we have a low volume node down here at 288.275, and then our next low volume nodes are up here at the 288.625 level. So this is a nice area to take scalps. Usually you would want to go long right here at this low volume node, take profits at or before the point of control, and the same thing goes here. You're going to want to also take shorts around this area up here, and then take profits at or before the point of control. So it was trading around this area for quite some time. However, do you notice anything else? Well, there's another little point of control area up here. This volume profile is not as big as the one down here, but the market did like the trade here. So the market found fair volume price in two different areas, right here and up here. Now look at the in-between. Look how low the volume is on the profile in between. So you got only 642 here, 661, 575, 569, 440. And then it starts to go up 948, 1,139, 2861, 11,091. So it starts to really pick up right here. So why is the volume low here? That's because the market doesn't want to trade that zone. That's what I call a it's also a low volume node area, but unlike a low volume node you would see, like say down here at this 2882.75 level, there's like one low volume node here, so this will sort of be like a support zone. Well, up here it's thin throughout multiple price levels, and I call that a squeeze point. That's just sort of my terminology for it. So I know that if we can break through this level somewhere around here, it's going to push up to this next point of control area, this next volume profile fair market value area. So, and that's exactly how it got down here. Once it crossed this threshold in the squeeze zone, it just dropped in like a rock and started trading in here. So the same thing is highly possible. The market doesn't want to trade these levels, so it's just going to push through them quite quickly. And that's exactly what happens, and that's exactly how this trade yields so much. But, I mean, you can see it. It's staring at you in the face, and without the volume profile, you wouldn't know this is a high probability zone for taking some really nice profits off the table. So we're going to watch the trade. It does take me a minute to really get positioned for it because as you can see back here on the chart, we did test this area. And if you go back a little further, you can barely see it, but we weren't testing as high as we did here. So I was going for a shot on this breakout. I knew it was coming, so I had to, like, I can't even remember. I had to either scratch or take a small loss on this first attempt to get out of here. And now we're coming back and testing this area again. However, if you look at the bars on the second try, the second test, there's one tick above where we were earlier when we tried testing it. So that's sort of a good sign. But, you know, nothing's definite in trading. It could fall back in. So you need to be on top of the trade management only in case that happens, because you don't want this thing to get away from you, and then before you know it, you're sitting out $50 because he didn't cut the trade. So, you know, if you don't marry the trade, get out and get back in. And if that's what you got to do, that's what you got to do. And I believe in this example, I show you exactly that. So I'm trying to look for a zone to trade. It's sort of falling back in. However, it does struggle a little bit. We're on top of an area that I marked as an R. This was sort of a resistant area. So I take a shot to try to go long on this bad boy. And it's not looking good. I'm not going to get the fill because it goes above me. Now it's above me 2 ticks. There's no way I'm going to get that fill, so I go ahead and attempt right here. Now, I don't ever, here's one thing I want to say. I don't ever recommend on a breakout trade getting in at the highest point, which is kind of what I did. I don't recommend doing that. Most times it'll fall back in on you. You want to get in right before the extreme edge, and this is pretty much an extreme edge before we hit the squeeze zone. So really taking this sort of trade last minute before the breakout is riskier, but I didn't think I could get the fill because of how it was going away from me. So that's why I did that, but I really don't recommend it. So now I'm sitting 2 ticks out of the money. That's not good. The ask is slightly larger than the bid. That's not good. You can see I'm covering. Now I'm 2 ticks out of the money again. So the way it's ticking down like that isn't a good sign. So I'm considering, you know, just taking 1 tick hit on the nose and just be out 1250 because of the way it was just ticking down like that. That's not good. However, on the flip side, usually before you have this breakthrough of the squeeze zone like this, it's going to stall here for a bit. I mean, but then again, look back here when we tried to get through it earlier. It stalled up there, and then it failed. So you don't know where this is going to go. You can have a slight idea. I knew we were going to get up there. It just, are we going to get up there? Are we going to break through this level now? Or are we going to have the market fall back in and then retest it again? So that's something I don't know. But the thing is, you got to take a shot if you know that you're going to break a squeeze zone. And again, I feel we're going to break the squeeze zone because we're, testing this new high here. What I mean by testing the new high, from previous examples on the chart, we're like we even came up 2 ticks above where we previously tested. So, and before that, the market was stopping where this R is located. So we're kind of getting through this level, and we're starting to get embedded up here, and we're testing. We keep testing new highs. So I'm going to try to break even on this one. You just saw how I put that order. Okay, I took a break even on it. That's good. I just didn't like it. I didn't like it. That's the thing. When it's taken this long and it's struggling like this, I'm not going to take it. I'm going to take it off if I have to. Now I'm just sort of looking around. I know that's all that moving is confusing. Now notice this. Notice how we have this large size sitting in here on these low volume squeeze zones, the 512, 520, 512, 421. Notice that. Now, just because you see the large size sitting there, generally that would mean that's a good defensive position. And the market would probably bounce there. But that right there is telling me one of 2 things. That's fake orders. Because nobody's going to defend a squeeze zone like this. Okay? That could either be fake orders or that could be stops. These could be stop orders. And what's happening is the overall market bias is to the down as far as retail traders go. So that could be stop orders. But, it could also be spoofs. So, maybe somebody's putting these fake orders here, if that's the case, so that way they can get filled right before we go through the squeeze zone. So they'll do that. They'll put in these fake orders. They'll hold the market down so they can fill lots of contracts. So we don't really know what's going on, but I would discount that as a defensive position just because the profile's so low there. So this does take a little bit to play out. I just want you to see the entire setup. I don't want to just play right when I get in before the move. I want you to see how this sets up. So I chose this area to get in because this is where we're ticking between the new high on the chart, and we're right before that squeeze zone. We're right on top of it. And so that's why I got in right there. I'm trying to get the fill on it. Now, you notice the mouse is coming over here. I know that I may not get the fill on it. So if that's the case, I'm going to want to market order in immediately if I know this is going to let go and push up to the next tick. Because once it gets through this squeeze zone, it has a very high potential of just shooting up. And it'll go so quickly that you won't have time to get in. And before you know it, the move is over and you missed it. So there it goes. I pulled the mouse off. I didn't get that. So now I'm going to have to try to get in another tick above. And what happened there, you just saw it briefly ticked up and ticked back down. This 25 sell market order came in and pushed the market down, which is a good sign. I'm trying to get the fill at the next level up. I'm covering for a market order for the push. We're right on the ragged edge, so this thing's ready to go. I get the fill, luckily, thank God. Sometimes it's very difficult to get a fill. Now I'm covering for a break even or a loss. Well, I'm covering for a break even, but you know, if it goes down against me, I'm gonna have to bail it and then retry. Like you saw how I did the break even trade earlier. So even though this looks like it's gonna go, you still need to manage it because it could fail. So here we go. It's looking good. I set a target. Why did I set my target here? Well, it's in front of the point of control. A lot of times I'll see the market bounce between 2 point of control areas. Just because we go through the squeeze zone doesn't mean we'll trade back through it. So the market could easily bounce off this point of control zone at the 288.875 level. So that's why I'm front running the point of control. And usually I front run point of controls for profits. So now I have an edge. It's one tick in my favor. So I can either market order out for a 1 tick win. Now I could order out for a 2 tick win. Now it's not zipping up as fast as you would think. But it will go up. And we're going through the squeeze zone. Notice there's no ticking back. The market's not falling in a tick. And then goes to the next level. It's not falling in a tick. We're not coming back another tick. It goes up another level. We're not falling in a tick. We're not falling in a tick. It goes up another level. That's good. We're not falling in a tick. And look at these market orders. You got 539 versus 77, 469 versus 103, 300 versus 9, 300 versus 70. So you can tell the market orders are just so much bigger than, you know, the sell orders. So that's a good sign. Take it up another tick. Now we're starting to hit that near my target here. And what's nice is when it's ticking up, you look at this 340 came in right here. 340 versus 170. So buyers are so confident in this move up that you can see they're throwing in these large defensive zones here, these large size to keep holding the market up. Now notice this 560 here. This is where sellers seem like they're going to draw the line in the sand right below the point of control level. Now it's 448, 400 versus 170. But the market is struggling to tick it up. There it goes. But it comes back down. So I go ahead and just take profits off there. Because of that struggle that happened at this area. And the move's now very overextended if you look at the chart here. Look how it just goes straight up. And you don't see any red bars in here. The move's pretty overextended. You wouldn't want to necessarily hold on for everything you can squeeze out of it. Now, I got to mention that it does go past this level substantially, and I'll show you that. But see how it's starting to struggle here? For me, that's a sign to get out. It just take the money off the table. It was a very easy play. Now you're starting to have some absorption here. You got 1,000 market orders on the buy come in, and they're not getting it through. Now we're starting to tick down. So, you know, I took the profits here, which is good because, I mean, theoretically, I would have never got the fill on the original profit target, which only 45 market orders came in, you know. I was too far back in the queue to get profits here. So it's good that I took the profits where I did. I could identify the struggling and got out at what I thought was the top. And then this blue ball comes in representing absorption. And we'll let it play. You know, now you got size on the point of control here. So sellers do have a nice defensive position. So let me go ahead and go forward some. So let me show you. So as you can see, they do get through this point of control level by a little bit, and then the market comes back in. And naturally, it's going to come in and get stuck here because this is the point of control level. Well, heck, this video is, I stopped recording it. But this trade does go way up for another $100 or another 8 ticks or so after it struggles here. But that's the thing, you don't know that will happen. And you want to, I mean, with scalping, you want to take the easy money. You want to take the money that's available on the table now. You really don't want to hold out these moves any longer than the market tells you. So, you know, yes, I do leave a few ticks on the table on some of these trades, but again, my criteria to exiting them is the struggle and the order flow. So we'll go ahead and watch it one more time. There's really not much to say about it. It's not one of those high-paced, fast trades that I have to constantly pause and rewind to show you all the components that I see. So let's just go ahead and watch it again. So again, when you spot a squeeze zone like that, that's exactly what this is. Look how thin the volume is. You have 2 volume profile areas, one down here, one up there. And I do believe that later in the day it falls through here again. So this is a zone you could have played multiple times throughout this particular trading day. Just to keep that in mind. So you want to look for zones like this. They don't happen every day. And when you have big size and squeeze zones like this, discount them. They're not valid enough to be an actual defensive position. So again, I'm trying to manage my way into the trade, but at the same time, it could fail. But since we're at the ragged edge here, I go for it. Got the mouse ready to break even if need be. I really don't want to. And there we go. We're off to the races as soon as we can get up above this. And I know that. That's why I moved the mouse up there and put the target, the profit zone in, the target, whatever. So now what I do is I'm leaning on a big bid, which is this 397. So that's good. My price has a defensive position behind it. And we're off to the races, even though it's not a very fast move. It doesn't like happen in seconds, but to make $112.50 in what, a matter of 5 minutes or so, that's pretty good. I wish I could always make $112 every 5 minutes. That would be nice, but In reality, that it doesn't happen that often. So, volume profile play. This is so easy for a lot. This is one of the easiest plays for a lot. And again, this doesn't happen every day. But this goes to show you that scalping isn't just taking smaller moves. These bigger plays are there, and when they're there, you take them. You know, you take what the market gives you, and you'll be surprised every day. Now, earlier in the video, I did mention that I had a goal of $200 for the day. I just want to give you a big tip here. Don't ever really set a hard goal for profits. Don't set a hard goal for profits, because you may start taking stupid trades near the end of the day to try to reach that goal. Now, if you're live trading, I definitely recommend having an actual drawdown price, like minus $100, minus $200, whatever, and then be done for the day, or switch to simulation and trade the rest of the day out. But as far as hard profits go, you don't know what you're going to get. Don't set a goal. Just get what the market gives you. And you can see right there, I just shut the depth of market down. Let me show you here, because I walked away. Kind of showing you some useless stuff. But I go up here and turn it off, so that way the mouse can't accidentally click something and get me in the trade. Because I'm stoked about that trade. You know, they say put your emotions to the side, but if you make a good trade, I don't see why you can't get stoked about it. Just don't get angry. Don't lose your shit on bad trades. You got to stay focused. But there's no reason why you can't be happy about good trades. So that was a volume profile squeeze play. Hope you guys liked it. That's the biggest trade on the channel so far. You know, if you would have traded 2 contracts, double it. If you would have traded 3 contracts, which, you know, three contracts, depending on the volume and the ES, is totally viable. At times, that's that's times, that would have been a $337.50 move. That would have been a nice little play there if you're trading 3 cars. So, but the thing is, if you can't trade 1 car well, then there's no reason to scale up. So, hope you guys liked it. Again, that's the volume profile squeeze play right there. And it happened multiple times throughout the zone throughout the day. So if you see this, recognize it. And if you see it, come back to this video. All right, I'm out.